Back to Flex Candle, where we read the candles and flex the moves. I'm Flex, and today we're diving into a full top-down analysis on Bitcoin, Ethereum, Cardano, XRP, and gold. We'll start from the higher time frames, work our way down to the lower time frames, and check to see if we find any good setups. Now remember, this is not financial advice. I'm not a financial advisor. You're responsible for your own trades. Always do your own research and trade at your own risk. All right, guys, let's get started. And we're going to start off here with Bitcoin on the weekly chart. And we have about 2 days before this candle closes, but as you can see right now, if we zoom in, this is a red engulfing candle. This is not looking good. The 21-day moving average is currently at 93,825. Bitcoin's price right now is 104,275. It's about 7 p.m. Eastern time. So right now, unless between tomorrow and Sunday we get a spike up, which we can, because that's what happened with this candle, it's not looking good. The stochastics here are starting to get a little bit toppy, even though we could stay up here for a while and drag. And one thing that I'm not liking, guys, again, we have to wait for the candle to close. As you can see here, before we had bearish divergence. As you can see in the RSI, this point to this point is drooping down, but this point to this point is pretty flat. So this is what brought us down to 74,500. Now I feel like the same thing is happening now. If we take from this point to this point, we could see that it's going up, and then if we get from this point to this point, it's kind of straight angling a little bit down. It's not crazy, but it is something to watch out for, and especially with this red candle, we could end up, start dipping down. Now what could change this is by Sunday, maybe this RSI starts to roll up and then they look the same, angled up. But right now, angled up and angled slightly down or straight is not a good sign. Other than that, guys, you know that I have this in a falling wedge pattern that should break us out to about 117,000. So far, like I said, this is a winning trade. It took us up to about 112K. So profits could have been taken. I'm still optimistic that we could get 117K, but I'm starting to get, a little bit bearish, especially if certain things start to close a certain way. We spoke about that in yesterday's episode. Now, if we step over to the daily chart, on the daily chart, we broke below the 21-day moving average. We closed yesterday's candle below, and today's candle closes in about an hour, and currently we are below. So unless we start spiking up and get above that 21-day moving average, this is not looking good. The next logical place would be the 50-day moving average, and that's currently at 97,755. So this is why I think we could come down to the 50-day moving average. If maybe we close the candle here, tomorrow's candles may be green, and we go a little bit sideways here, maybe the 50-day moving average could get a little bit higher, and by the time we touch it, maybe we're at 100K, at 102K, and then maybe from there we could blast up, since we do have the golden cross. The stochastics here are very low, but as you can see, they're rolling over even more, so we could stay here for a little bit until we touch this 50-day moving average. Again, this is getting bearish for me here. We head over to the 8-hour chart. The stochastics are dragging here. We're below the 21-day moving average, below the 50-day moving average, and I believe we just lost the 80-day moving average. This is not looking good. On the 4-hour chart, told you the last line of defense is going to be the 200-day moving average, and that's currently at 102,485. So far, we lost the 200-day moving average on the 3-hour. So yesterday, we lost that on the 2-hour, and we had the 3-hour and the 4-hour left. Now we took over the 3-hour. Last line of defense, guys. If we close candles below the 4-hour chart, then that weekly divergence and the fact that we're closing candles underneath the 21-day moving average on the daily, all of that starts to correlate that we're starting to get bearish, and we might get some type of move down, and who knows for how long. So again, if this closes below this yellow line, and tomorrow, in a couple of days, whatever it is, I might have to start getting out of some of my trades and some of my positions that I'm in. Now we head over to the 1-hour chart. Stochastics, we're on the way up, but look, they're looking to roll over, and we're below all these moving averages. We have to regain this 21-day moving average that's currently at 105,267, and slowly regain all these moving averages. Even this 200 is at 108,000. That seems far away now that we're at 104. Now on the 4-hour chart, let me go back to it. If I put the patterns I made a falling wedge yesterday. It looks a little bit different than how I made it yesterday. I made it look a little bit more prettier, and we went down. But as you can see, it's been tracing here, and we've been trying to keep it above. We just broke out of it. So if we go low and we don't break back in, this could be a failed pattern, and then we're probably going to end up coming down. We have to be careful. So overall, guys, right now for Bitcoin, I'm seeing us going lower. And again, if we go below this 200-day moving average, then we're going to start playing around with 100K and possibly go down to 97K. That's not something that I would want to see. All right, guys, let's head over to Ethereum. And Ethereum, the one thing that I'm liking about Ethereum is that even though Bitcoin has been coming down, Ethereum's price hasn't really fallen too crazy. We're still at 2,531. If we put the patterns here, obviously I have this in a falling wedge as well. And this falling wedge was supposed to break us out all the way to 3,222. We didn't get that far up. We ended up getting to 2,790 around there. So, you know, some profits could have been made. Still a profitable trade, but we didn't hit the measured move. This is starting to look to me like a head and shoulders. We're below the 21-day moving average, and we're below actually the 50 and the 80. It even looks like the 100. Same thing as Bitcoin. The next line of defense is the 200-day moving average on the 4-hour. If we lose 2,304, we might go lower. Stochastics are low, but they look to drag. Let's take a look at it now from the top down, from the weekly. On the weekly, we're currently above the 21-day and the 200-day moving average, but there's a lot of wicks here, as you can see, which means we weren't able to get above. And so far, again, we have to see how this is going to end up closing on Sunday, but this is a bearish hammer pointing down. So if we lose the 21-day moving average and the 200-day moving average, I would have to get bearish again for Ethereum. We head over to the daily chart. We're below the 200-day moving average. It's almost like we have a triple top here. Try to come up here, we couldn't, got rejected. Came down, came back up again, rejected. Came back up again, rejected. Topping tail. We're getting below the 21-day moving average now on the day. The next stop is the 50. That's at 2,000. The stochastics here look to roll over. So this is not looking good to me, especially if Bitcoin's going to continue coming down. We need to bust above this 200-day moving average to stay bullish, and we haven't been able. All right, guys, let's head over to Cardano. And on Cardano and all these altcoins, I was telling you guys last week that if Bitcoin doesn't start going up, we were going to start seeing lower movements for the altcoins because we haven't been able to maintain above the 200-day and the 21-day moving average on big time frames. Look at the weekly here. We haven't 3 weeks in a row. This could be the 4th one that we're trying to get above the 21-day moving average and we can't. Now we're gonna go back down to retest the 200-day moving average. Cardano right now is at 69 cents. Last week, I think it was almost at 85 cents. So now for it to be below 70 cents, it's not looking good. If we look at the daily, and also here, look at the stochastics here on the weekly. We were on the way up. Now it's looking to roll over. That's the thing. If Bitcoin's gonna go down, I feel like the altcoins are going to get decimated. We look at the daily chart again. Got above the 21-day moving average, the 200-day moving average. This is bullish, but then we lost it. We couldn't maintain it. We tried to come back up, lower, high, high, lower, high. We couldn't make it back up. Now we just lost the 21-day moving average. Bearish. Stochastics are also low here. Let's head over to the 4-hour chart. And on the 4-hour chart, below the 21-day moving average, below the 21-day moving average, stochastics look to drop. So for Cardano, I'm actually seeing a little bit more downside, especially if Bitcoin's going to continue to drop and Ethereum's going to drop. It looks like we're below all these moving averages. This is not looking good to me. All right, let's take a look at XRP. And on XRP, we start off with the weekly here. I was telling you guys last week that it's possible we could get down to $2.19, and right now XRP is at $2.13, guys. It's getting bad here. The 21-day moving average, on the weekly, we're below the 21-day moving average. Again, we haven't been able to get above it. A lot of resistance. On the daily chart, we lost the 21-day moving average. We just lost the 200-day moving average. Stochastics are low. This is bearish, guys. We head over to the 4-hour chart. We definitely lost it here too. The 200-day moving average, 21-day moving average. So things are looking bearish. It looks like XRP could be heading down lower. So we have to keep in mind that, things are looking bearish. It's all up to Bitcoin. If Bitcoin could continue going up, then we'll be able to save the altcoins. If not, I see the altcoins coming down lower still. And the last thing here that we're gonna take a look at is gold. And for gold, I've been telling you guys, we're playing around this range. We have to wait for the 21-day moving average to catch up to price. We are kind of like flagging out here, so that's pretty good. The 21-day moving average is currently at 3,039. The price of gold is 3,200. 288. And if I put on the patterns here, as you can see, I made this flag and we're tracing the flag perfectly here. If we go to the daily chart, I put, first of all, I told you guys that this looked like an M pattern, and this did break down, not the full measured move, but this M pattern didn't play out, and now we're coming back up. And I was telling you guys, I have it in the flag, but this could end up being an inverted head and shoulder. As you can see, it's been tracing it perfectly, and this could be the right shoulder. So let's see what ends up happening. We're gonna give it more time. We look to come down. These stochastics look to roll over a little bit. We do have a red candle. We take a look at the 4-hour chart. Stochastics are also on the way down. We're below the 21-day moving average, below the 200-day moving average. So I still see a little bit more downside for gold, but I kind of feel like we're going to continue tracing this flag pattern. If we drop down any more, it'll probably be to this 50-day moving average, which is currently at 3,221. I could see gold coming down to 3,000, 3,100. So let's see what ends up playing out. But right now, guys, I'm pretty much bearish on everything. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, and subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.